I'm Dan Fitzpatrick at StockMarketMentor.com, and it's the day before Christmas, December 23rd, and I want to look at Nike today. Look, the company reported earnings that sent the stock up after hours yesterday. I think it was like 1.5 or something like that. And then the stock opens up this morning. Okay, you can see it. This is known in trader parlance as a gap and crap. The stock gaps up first thing in the morning as all those real smart retail buyers rush to buy the stock. It's like, oh my gosh, we got to get Nike before everybody else gets in and hears about the earnings. Meanwhile, the pros are saying, yeah, I got your Nike right here. If you want to buy some Nike, I'll sell it to you for about $1.36, maybe a little bit more. And so all the retail orders are filled. And of course, there's probably some short covering too. It's about 9 shares shorted. I'm exaggerating, but not by much. There's just not that much short interest in the stock. So this, frankly, is just all retail lemmings. I hope it wasn't you. If it is, don't take offense because I don't know who you are, but resolve to never do this again. The stock gaps up. And it wasn't, it wasn't a huge gap. To me, a huge gap is anything over 5%, 7%. But this was like a 3% gap. There's literally no follow-through. No follow-through at all. We can go to a 1-minute chart. Let's go to the 1-minute chart, Bob. First minute was when it's a gap and crap, and if you bought it after 1 minute, you need to be saying, oh crap. If the stock does not continue to move higher on a gap, if it doesn't continue to move within the direction of the gap after 1 minute, then you need to take your cue and exit the stock and resolve to never buy again until you've seen the stock trading for a few minutes. I've taught a course. I've actually taught it twice. We did an update on it. It has been our most popular course by far. No, I don't even know what's in second place, but it ain't a photo finish. It's called the 59-minute trader. Now, I'm not saying this to sell you that course, though. If you want to buy it, promise you'll make money. Everybody else has, not one bit of negative feedback on it. But there's a reason why it's called the 59-minute trader, not the 60-minute trader. It's because it's designed to be trading during the first hour of the market, and you've got to at least let the stock trade for a minute. So here, this was a short. Now, this hasn't been like a screaming short. It just hasn't moved down that far. But if you just took it down and said, okay, 59-minute trade, I'm out after an hour, okay, that would have netted you almost a 3.5% gain. But that's not really why I'm talking about this. Because frankly, as I do this video, I think you could buy the stock at 128.44 and probably make money because it's starting to run higher into the end of the day. And by the way, it is Nike. The reason I'm making this video is twofold. First of all, to illustrate to you, and this is about as real time as it gets unless we did it first thing in the morning, to illustrate to you that if a stock gaps up on a known catalyst, earnings, the earnings were great, although I've seen some reports, they weren't that great. But the market obviously liked them. At least the retail guys did. I'm sure there were some upgrades because that's what analysts do. They're always a little bit like sheep, and when the news is good, then they upgrade the stock to buy. You'd think they'd be doing that maybe when the stock was down and they're trying to get their clients in before the stock moves higher. But, go figure. I have proudly never worked on Wall Street. So I don't get that game. But what I'm saying is when the stock gaps up, you know what the catalyst is. And in this case, earnings, there ain't going to be another catalyst anytime soon like that. So the stock gaps up, it starts to trade down. That is time for you to liquidate whatever longs you have. If you are long the stock, and I was talking about this yesterday, to be quite honest with you, I forgot the company was reporting earnings, which is my bad because it's actually on my calendar. But I had said, hey, this is holding up okay. Looks like, it's a little extended, but it's okay to buy. Anyway, members, you can check the video. I never go back and edit them. But then they report earnings, and what happens? Big gap, all-time high, and then a crap. So the second reason that I'm doing this video is this, to tell you long term, look, the uptrend is intact. You look at the weekly chart, it's totally working. You look at this pullback to the 50-day moving average. Hey, we've been there before. Here was a big shot across the bow. Here was another one, but ultimately the stock recovered. I don't see this breakdown as fatal to the stock, but I do see it as fatal to you if you bought this on this dip and are expecting the stock to start running up to new highs right away. That's not how these things trade. Guys and ladies, this is institutional distribution. This is people taking their profits that maybe bought it below 70 and now they basically got a double and they're saying, you know what? Earnings were great, but it's not like I want to go add, so why don't I just subtract? So it's going to take a while of churn and burn in this area for Nike to get enough steam, basically to form another sideways base like it does every so often here, everything formed a base here. And back here, it's going to take this a while to kind of churn and burn and raise the average cost basis of traders right around this 130 level, and that could take a while. So if you are still long Nike, I hope you're in for a long haul because this stock is going to just drift sideways. If, by the way, it starts trading below, say, 125, then it's likely to, I hate to prognosticate too far in the future because then I sound like some of these chucklehead technicians that come on espousing to know exactly what the stock is going to do. I'm not that guy. But I will say this, if the stock starts falling below 125, what that tells you is, give me a second here, be patient, thank you, Santa Claus, red, white, and then we'll put, there it is, the Santa Claus colors. Everybody up here that bought is a loser. And in that case, you're going to see a lot of these folks selling, and there's not going to be a whole lot of buyers, because at least not enough to overwhelm the selling. So in my view, 125 is the line of demarcation. It's the line in the sand. If this is broken, my bet is that ultimately you're going to see this stock trade to the 200-day moving average, whether it's this way or whether it's this way, but it's going to trade down there. So keep your eye on the 125 level and keep your eye on the first minute of trading on these gap ups and gap downs. They totally matter, and you can make money if you understand how to trade them. Okay, I will see you next time. No strategy session or free video tomorrow night, but I'll get one out to you sometime over the weekend along with the weekend update. Have a Merry Christmas, Happy Holidays, be safe, be happy, be grateful for all the blessings that you have, and I don't care who you are, you don't have to look too far to find somebody who would love to have your problems. So be thankful for the problems that you have because they're probably attendant with some blessings, and also give thanks to your family and friends and try to be a better friend and a better family member in 2016.